Welcome to Drill Down Earnings. We have the latest quarterly results from ON Semiconductor. The market loves these numbers. The stock is way up. It's the best performer in the S&P 500, the NASDAQ 100. But the numbers stink. So what's up? Let's take a look at the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. And ON Semiconductor earnings, second quarter earnings, beat Wall Street estimates, but they were lousy. So why is the stock up so much? Well, in part because of that beat. The company had revenues of $1.7 billion. Gross margins are pretty good, better than 45%. And they had pretty good earnings, 78 cents per share. But when we look at these numbers, what we see here is a big decline in the automotive business, which is most of their business, the majority of their business. So they're really feeling the automotive pain, a 17% reduction in revenues. So why is the stock up? We knew the big news about Volkswagen. What, you didn't know? Okay, they signed this big deal announced earlier this month to give Volkswagen advanced silicon carbide microchips to be used in all their electric vehicles across their fleet. Volkswagen, Audi, Porsche. These are the things, you know, in an old combustion engine, you get more energy by putting more gas into the tank. Well, with an electric vehicle or a hybrid vehicle, you get more propulsion in the car when you release more voltage into the car. That's using these silicon carbide microchips made by ON Semi. So the rising electric vehicle market is key to these guys doing better. Lately, electric vehicles have not been doing so well. They've been growing, but not as fast as expected. The auto manufacturers went out and bought a lot of chips that they didn't need, as it turns out. So working through that inventory has taken time, and that has really hurt ON Semi. All ships sink with the automotive tide when it comes to ON Semi. When the automotive business is slowing down, they are slowing down. Why? Because, as I mentioned, automotive dominates their sales. It was 52% of sales in this lousy quarter they just reported. But in their analog and mixed signal business did okay. 0% growth, and 0% is better than the negative 17% they reported overall. But what's really important here is the comments they had in the conference call. They talked about the new business. They talked about going through the auto show in Beijing and seeing that, in fact, just about every single car being shown in the future is using ON Semi devices. So those cars might not be in the market quite yet, but they can see the future, and for the future they think it's bright. Or so says the CEO. So you're gonna hear some comments from him in a second, but I wanna look at the chart first, the stock chart. Up 13% today, belying a 25% decline over the last year, but that's better than it was even just last week. When we look at, however, what the CEO had to say here, really positive comments about what is about to come in the world of semiconductors in Chinese EV.
We talked about China, we talked about the Beijing Auto Show, where literally we went through every car that got announced in the show, and I can tell you exactly that we are designed into it. As those cars ramp and as those cars become successful and the market recovers for BEV, both in China beyond what it is and outside of China, those are the design wins that are going to ramp for us and dictate what 2025, 26, and beyond are going to be. So I will tell you, from a design win perspective and a market relation perspective, we are firing on all cylinders here. Or I guess I shouldn't say cylinders. We're firing on all motors today.
So that was CEO Hassane El-Khoury. What a great name, El-Khoury. That should be my name, El-Khoury. But regardless, I think it also is really important to see that their cost cutting at this company was really strong. The profitability hanging in at 22% EBIT margins. And again, that's with a big decline in revenues. So be able to kind of improve margins over the last few years, and the notion that revenues are about to pick up into the coming quarter and coming year, really good news for ON Semi.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So ON Semi's second quarter earnings, here's what you need to know, the numbers that really matter here. Revenues of $1.7 billion. That was 17% less than last year. They're really feeling the automotive pain. because the automotive electric vehicle business just isn't what the manufacturers thought it was going to be. It's getting better. It's still growing, but not at the same pace as it was. The automotive manufacturers over-ordered chips. They're working through that inventory, and that's hurting ON Semi now. But the future is bright. They're talking about all kinds of design wins, and they see a turnaround really happening at ON Semi. I promise you to bite one number that tells a whole lot. Automotive down 11% sequentially, getting worse quarter after quarter after quarter, but maybe that's over. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And of course, you can check me out on X at Cory TV, Drill Down Pod, and Instagram and TikTok, and on YouTube. Check us out at 65 Media.